Hello everyone and welcome to the Cyclical Investors Club. This video is going to review some of the ideas that I've shared over the past couple months since we started the YouTube channel. It's been a relatively short period in order to check performance because I'm usually talking about a couple years in the future when I make these suggestions, but we've had some volatility in the market and so we're starting to see some differentiation in the performance of the ideas that I've shared. So we're going to examine those here. First I'll have a quick disclaimer and then we'll get into some of the returns. And welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer and this is a channel where I share my investing process and strategies using examples of stocks that comprise the S&P 500 index. These videos are for educational purposes only and are not personal investing advice. If you would like to receive analysis on stocks that are not part of the S&P 500 index, as well as receive additional in-depth portfolio strategies, consider joining the Cyclical Investors Club premium service. It has produced market-beating ideas and strategies, costs less than $30 per month, and it helps support the investor education and research that I share with the public. With that, all right, let's first start by taking a look at the buy suggestions that I've had over the past couple months here on the YouTube channel. Let's see, we've had 8 suggestions. 7 of those are positive, and some of them are up really big. People's United has a buyout offer on the table, so I've actually taken profits in this one. But you can see in just a couple months, person would have made about 26%. Over the average time period that these were suggested, which I have the dates over here, you can see the S&P 500 is up about 0.75%, and you can see that the ideas on average that I suggested are up over 15%. So they've really just pretty much crushed the averages. Anthem is the only exception. It's down about 1%, but it's had a pretty strong rally here in the last couple weeks that we've started to see this rotation out of growth. So we can see we're doing really well in terms of the buy suggestions and massively outperforming the market. I think anybody would be happy with those returns. So we're starting to see some of the value being recognized in these stocks. And even Facebook, which is a tech company, it's underperformed the S&P 500, but if you compared it to the NASDAQ or QQQ, it would be outperforming those as well. So doing really well across the board. Now let's take a look at some of the sell suggestions that I've had. So just a reminder, sell suggestions are quality businesses that are just trading too expensively. For the most part, I think the market has started to recognize some of these, and the prices have come down. The one exception is Estee Lauder, which has continued to rally pretty strong, and it's not uncommon to have a pick or two that kind of go against the grain. So the market's really liking the reopening part of this company, I think, with more people going out in public and going back to work and so forth. So that's probably what's behind it. I haven't looked too closely into it, but we can see PayPal down 11%, Apple down 8%, Intuitive Surgical down almost 13%. Overall, compared to the S&P 500, these stocks have underperformed by about 3.5% or 349 basis points. So again, even though Estee Lauder's rallied, on the whole, a person who sold these and just went and bought the index would be doing much better. So that looks pretty solid. Now the avoid suggestions, these are stocks that have things that are kind of not necessarily obviously wrong, but over the long term is when they usually get revealed. Okay, so we can see that on average they've been doing pretty well here because some of them look like good values, but I think that over the long term, 3, 4, 5 years, we'll see that potential value disintegrate, not play out as well as investors think. Now, One big outlier here is Carnival, which is up about 29%. One of the things I try to do is each week, if I try to give a buy suggestion along with the sell and avoid suggestion. So the week that are, stocks that are kind of in the similar category. I didn't do that every week, but I did on the week of Carnival because I knew there was a potential for the market to come in and buy this stock, even though the quality isn't very good. And I actually think that this is the type of company that's going to be the most dangerous for people this year, because they're not going to look at the fundamentals of the business and how much damage was done by COVID, and they're just going to look at the theme behind it. So the week that I did this, I also suggest, and you can see it's up 29%, I also suggested Valero and HollyFrontier as better alternatives to reopening, and you can see that they're up even more. So again, it's what's the best choice here? Again, with banks, it's a very similar situation. That week, I suggested avoiding Wells Fargo and PayPal, which are financial companies. We saw PayPal was down like 11 or 12%. I also suggested buying People's United, which is up 26%. So we can go and look, and Wells Fargo's doing okay. It's up like 15% because it was really pretty cheap. But the question is, over time, how is that going to play out? And also, was it the best bank to be buying at the time? And so if you had a choice, you would much rather have wanted People's United because one, it has a buyout offer on the table, so you already could have banked these profits in a couple months. And Wells Fargo is still questionable long term how it's going to go. So same thing with tech. I talked about Apple, Tesla, and Facebook in the same week for that very reason. They're both large cap tech companies. Tesla's down about 25% since then. Apple's down 8%, but Facebook is up 2%. So 2% doesn't sound like much, but when you look at the alternatives, it's performing, much, much better. And I think over time that's going to continue. Let's see. We also had some media companies. So I did Comcast and Disney. I just compared those two, and I didn't have a third one in there. So Comcast is up about 3.5%, even while the market fell. Okay, and Disney actually hasn't done too badly. Let's see if I can find it here. So it's up about 1% while the market fell too, but we can see Comcast is doing a little bit better. So, and I think it's going to take a while for this Disney to wear off. We're gonna want to see a reopening, and then investors will, I think they'll be expecting a faster recovery for Disney than what will actually happen. And that's when we'll see this price either just level off and kind of stay flat for several years, or come down the way we've seen some of these other stocks come down. I think those were the ones that were directly comparable. The first couple weeks I just kind of picked random ones that I thought we might want to be careful about. So that gives the overall view. The stocks that I thought we should avoid are actually outperforming by a little bit, almost entirely due to Carnival, really. And the sell suggestions are underperforming and negative, while the buy suggestions are massively positive. And I would say we've had a big move in stocks like Principal, also on the refiners. I still think there's more upside here. I don't expect them to rocket 10% a year or whatever all year long. But so we've had a pretty good rally here. I still think there's some upside in a lot of these stocks. I still think Comcast isn't super cheap, but it should keep growing as we reopen the economy and so forth. So far, I don't think I could do a better job given as many picks as I've shared. I mean, we have probably close to 20 ideas here just in a couple months, and they're mostly playing out how I would have expected. I'll try to come out with some new stuff next week. I'm not sure. The market's pretty expensive right now, so I haven't had a lot of buying opportunities, and I don't want to only post sell videos, but we might kind of get into a stretch here where that's what happens, where just everything is really expensive. I can't really find a good buying opportunity, but we'll see how it goes. I'll think about it this week and we'll see what I can put together. Thanks for watching, and I'll keep tracking these every month or two, and we'll just check in and see how they're doing, because things can change pretty quickly, as we've seen. And we'll see what we can learn about stock selection. If you like the video, hit the subscribe button, and I'll see you guys next week.